And my last point to you, you do not sell your Bitcoin. Thank you.
News on the debt limit. Kayla, what do we know?
Well, Scott, Treasury Secretary Janet Yellen just wrote a letter to leaders in Congress saying that beginning next Thursday, January 19th, the United States will be reaching its statutory debt limit of just more than $31 trillion, at which point it will have to start taking what it calls extraordinary measures to conserve capital at the federal governmental level to avoid a default on debt. To do that, Treasury is going to be withholding some investments from retirement funds for postal service workers as well as other federal government employees. And Secretary Yellen says that as soon as any such deal on the debt ceiling is reached, that those investment accounts will be made whole. A senior administration official tells me that the White House believes that negotiations on a potential debt ceiling deal would begin in earnest after the tax season deadline in mid-April, at which point Treasury will know exactly what tax receipts have come in, what revenue looks like, and exactly how much time will be left on the clock, at which point they'll be able to begin negotiations with Republicans in Congress about exactly how a deal could come together. Secretary Yellen says that the U.S. will be able to maintain these extraordinary measures until about early June. We'll see how that goalpost moves in the coming months. Scott?
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And we have Janet Yellen comes out about the debt crisis. And guys, I told you this at the beginning of last year. They were going to use this as a movie. And as we can see, she comes out and states that we're running out of money on Thursday, January 19th of 2023. So guys, they're definitely about to crank this movie up again. And they will be able to ride this for about 6 to 9 months. And guys, we see Bitcoin and cryptos are pumping. But as we can see, all the cryptos are moving up at the same time. That's how we know all the cryptos are about to go down at the same time, because we know the masses don't care about crypto. And that's the reason why the Fed can pump crypto, make money, pull it out. And majority of the people don't care because they're not invested. And guys, even though we are the future, the switch is not ready to be pulled yet. Because we'll know when the switch is about to be pulled, because we're going to see 99% of these cryptos go down. And then also we're going to see the separation of the real utility tokens and these meme coins. But when you see over 200 million coming to the market out of nowhere, that's an algorithm, and the Fed is running it. And remember, the Crypto Teacher told you. And don't forget, all the central banks are going to be raising rates and running off the balance sheet at the end of the month and the beginning of February. And we know for sure all of them are going to be doing it for February and March. The Fed may pause, but we know the EU is going to keep going. But the Fed also is going to be running off the balance sheet. Now we have Jeffrey Gundlach. He doesn't talk about the fourth industrial revolution, but he's one of those people that gets the closest to the truth. And like he stated, anything but the U.S. because the dollar is going down. But in my opinion, the dollar is not going to go down, not right now. Not as the Fed is raising rates and also running off this balance sheet. Not just yet. They're not ready to take the dollar completely down. But we do see that it's losing strength. And as the dollar loses strength, we know gold comes into play. And we know the central banks have been buying gold. They just haven't just started. We know gold and silver are real money. And then Gundlach talks about the yields, the bond market. And you know I go over that every single day because it's so important. Because we can clearly see how it's controlling the market. Even Larry Fink from BlackRock, he was on CNBC speaking about the bond market. But guys, we know the Fed is manipulating the bond market, pushing down the yields. But because we do have real interest rates, you now can make money off of your money without taking a gamble. But guys, don't forget why we're back into this environment, a real interest rate where the economy should have been at in the first place. But we have too much debt in order to take this type of interest. And the Fed knows this. and it's going to weigh on this economy. So then, therefore, these corporations have a reason to lay off. That's the reason why they say that they're going to take us up to 5-6% and stay there for a while. They're going to put as much pressure as possible on the economy, so then therefore they can make the excuse on why they're laying off, so therefore they can bring in the robots, algorithms, and drones. And we know they cause the problem, wait for the reaction, and run in with the solution. And the stablecoin CBDCs by that time will be ready because they'll be running in regulation. And guys, we have the economist Larry Summers speaking on ChatGPT and stated there's a generation that's ahead of it, that's already embedded in our corporations. And guys, we know he's telling the truth. We already know about IBM Watson. IBM Watson can do things 5 times better than this ChatGPT. And IBM Watson has already been embedded in all the corporations. And don't forget OpenAI, this chatbot. Bill Gates had invested $1 billion back in 2019. Never forget that, guys. This is all part of the plan. And then we have the SEC speaking about Genesis and Gemini. Admits they were under investigation for over a year. And then the crash happens, and then they come and do something. So, guys, we know this is all part of a movie. Like I told you, this is all part of a bigger plan. Only thing you have to do is sit back, get your popcorn, and let it play out. Because remember, your life is an illusion, and TV is your reality. And remember, the crypto teacher told you, because he knows, when it comes to the New World Order, it's all planned out. You have a wonderful day.
A bus. Anything but the United States, anything but the U.S. So what's up with A bus? What's wrong with the good old USA when it comes to investing right now?
Well, I think the dollar is going down, and it's already started. I mean, the dollar index DXY was up at 116 several months ago, and now it's below 103. I think haven't checked it in the last couple hours. And basically, the Fed is going to be incrementally easier than other central banks, just as they were incrementally tougher during 2022, and that's why the dollar went up quite a lot for the first several months of the year. But now they're over tightened, I think, and they're going to be easing, and the dollar is going to go down, and that creates a tailwind for dollar-based investors in foreign markets. And the U.S. market outperformed by a humongous amount over the past 10 years prior to 2022, and became very overvalued versus its own historical valuations, and very overvalued on things like Dr. Schiller's CAPE ratio, really more than double the valuation of emerging markets, for example.
Right. So with emerging markets, then, all right, is it you just buy maybe an ETF? Are there parts of the world, for instance, China with the reopening, that might actually even exceed the general growth of emerging markets?
I really just like a broad basket of emerging markets. Typically, I don't like China because as a U.S. Investor, the tensions between the U.S. and China keep escalating. And I worry that if something really goes bad, you might not be able to get your money out. So I worry about that. But I do think China, the reopening will be incrementally positive. So for the short term, I would not be afraid of China. But I think South America, I think India, and Southeast Asia primarily, though. India is my number one pick long term.
Yeah.
I just think demographically, India is exactly where China was 35 years ago. And we've seen what happened to the relative economy of China versus the United States. And I think India is going to be in that same position, and they have fantastic demographics. So I would buy that one and hold on to it. I wouldn't even open my statement for 5 years, lest you get fearful when it drops 25% in a quarter. Because I think this is a long-term, this is an investment for your grandchildren's college education.
I love that.
I think so, particularly because I believe there's a lot of downside room on the dollar. When it comes to commodities, I look at the Bloomberg Commodity Index, BCOM, and it's been living below its 200-day moving average for a while now after going up quite substantially in the first few months of 2022. And I am not involved really in commodities other than gold at this point, which I also think will do well when the dollar goes down. But with the economy weakening, it's difficult for commodities to really get going on the upside. I really think you need easier monetary policy for that to happen. So I'd wait for the BCOM to cross above its 200-day moving average and stay there for like a week or something like that. And then I think you might see another leg up in commodities as the dollar declines. But now I'm on the sideline broadly on the commodity complex. And just look at WTI, which is a really important commodity. And that's been going, it's been hanging out there at about 80 for quite some time. So I want to see that start to move on the upside as well.
I want to pick up on the gold for a minute because gold's acting great. The chart looks phenomenal. Last year, the central banks that weren't the Federal Reserve, maybe not the ECB, but all these other global central banks bought as much gold as possible. What's going on that's sparking this particular move?
I just think it's global uncertainty and also the dollar going down again. I mean, the dollar's been really important relative to the gold price. So in most currencies last year, gold did quite well because it was pretty stable. It was up 2% in dollar terms, but the dollar index was up a lot. So in foreign currencies, you did pretty well in gold. But I just think that sort of mistrust of the geopolitical situation will likely also be a tailwind for gold, in addition to easier Fed policy and declining dollar.
Rather than the Fed when it comes to rates, why?
Well, all you have to do is look at a chart of the Fed funds rate overlaid on top of the 2-year Treasury yield. And going back nearly 25 years, every single Fed move has been presaged by an earlier move in the 2-year Treasury. Just think about a year ago when the 2-year Treasury was up at around 1.5 around the Super Bowl last year, and the Fed was dragging their feet on raising rates. And lo and behold, they had to do 4.75s in a row to catch up with the 2-year. But now the 2-year yield has been falling, and the 2-year yield is below the Fed funds rate. In fact, every bond yield in the Treasury market is below the Fed funds rate. And right now, the 2-year Treasury is at 4.13, and the high end of the Fed funds rate is 4.50. So I think if the 2-year Treasury drops below 4%, and it could happen any day now with the way it's moving. I mean, it's moved already 30 basis points year to date. So we're already 3/4 of the way to that sort of below 4%. I think you're going to see a radical shift in Fed rhetoric because the 2-year Treasury is always, people should really look at this overlay chart. I have it on the webcast that's going to be up on replay, the Just Markets webcast. It's remarkable how you don't really need the Fed and their 800 PhD economists. All you need is a Bloomberg terminal or a screen and look at the 2-year Treasury. Plus, there's so many recession indicators that are now flagging. The leading economic indicators is always very important. It's very negative. It's more negative on a 3-month annualized basis than it is over year over year. It's negative 7.3 annualized. You've got money supply growth. M2 is non-existent over the past 12 months. You've got ISM orders, ISM PMIs that are tanking. You've got the housing market, which obviously is very slow. So the Fed just needs to get in line with the bond market.
What one hears from the experts is that there are proprietary systems inside some of the major companies that are even a generation past ChatGPT. So I think this is coming at us very hard and is going to touch almost every aspect of life. Certainly for those of us in education, the ability of machines to write essays is raising all kinds of questions about what constitutes a student's own work. On the other hand, those are tools that are going to enable us to figure things out and make progress on problems much faster than we did before. So this is an area where all the various stakeholders need to be thinking very, 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 very hard. There's enormous potential in this, but as with other innovations like the internet, like the steam engine, there are potential implications, both good and bad. And I think it needs very much to rise in terms of how prominent it is in our national discussion.
Question. The SEC has known about this product for a long time. We understand, based on a tweet today or late last night, from Tyler Winklevoss of Gemini, we know that Gemini had been under investigation for this product for quite some time, more than a year, and yet the SEC allowed this to continue for that period of time. They were in talks with Gemini, and then the crash happened in November, because of FTX. Gemini was no longer paying any funds to customers, and 2 more months went by. So it seems to me that the bigger issue, the thing that triggered this, was the answer that Gemini filed in a separate case, in a class action against Gemini, brought based on behalf of Gemini customers for the failure to continue payments under the Gemini Earn product.
But I guess the bigger question is, SEC is to protect the public from instances like this. This was something that the company knew was happening because they were under investigation, something that the SEC knew they were working on because they were investigating, and yet we got to this place.
That is an interesting question. The SEC has been clear for years that something like this Earn program is a security. So it's puzzling why they didn't come to a resolution of this a long time ago, months and months ago.
Right. So who do you blame, though, in this? Do you blame the SEC for not coming to a conclusion? Do you blame the Winklevi twins for offering this product, if you will, to their customers? Do you blame Barry Silbert for offering this product to the Winklevi and their customers? I mean, how does it line up in your mind?
Boy, there's a lot of blame to go around. I think Barry Silbert, it sounds like, has a lot of responsibility for this. But the Winklevi twins also seem to have just relied on Barry Silbert providing from the parent company to Genesis a guarantee or a promissory note. And they didn't inquire into what that looked like further. So basically, Genesis has been operating in a non-solvent way since around June of 2022. And the Winklevi...
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.